Hello, welcome to Strictly Money at the News Forum, where all voices matter. I'm Saijal Patel. ESG investing continues to see tremendous growth. In fact, assets under management is expected to increase to $34 trillion US by 2026, up from just $18 trillion 2 years ago. And the biggest driver of this growth? Climate change. There's little doubt that investors want to make a difference to the environment and social causes that are important to them. And if that's you and you want to make sure your dollars are making an impact, then listen up. Rosa and Nalini Feuilloley oversee key initiatives in responsible investment at BMO Global Asset Management, and they both join me now. Rosa and Nalini, nice to have you.
Thanks for having us. Thanks so much for having us.
So the growth in interest in tying investing with impact, as you heard, is exponential. But maybe we can just first step back, because there is ESG and then there is SRI, like socially responsible investing. Nalini, can you talk about that? Can you clarify the difference between the two?
Absolutely. And I'm going to confuse viewers by throwing in a third term, which is just really responsible investing. That's what we really call this space today. And that is kind of the highest level of umbrella terms that I think anybody really needs to know about. SRI, this whole concept of socially responsible investing, was an earlier iteration of how end investors express their values in their investments. And it was more focused on ethical investing. The term ESG really speaks to the issues or the factors that should be looked at alongside traditional factors when investing. And so ESG investing goes hand in hand with responsible investing, whereas socially responsible investing focuses a little bit more on values and having those reflected in investors' portfolios.
So can you have an overlap? So can you care about environmental issues and it still fall under SRI?
Yeah, absolutely. So again, it's about values and ethics a lot of the time. And so people want to take a hard line on, let's say, an issue like fossil fuels, that can absolutely fall under the umbrella of SRI, because that issue impacts them personally and it's more about their social values. But I would say that SRI is a term that's actually evolved now. And so it's not an either or as much. We look at all ESG concerns and issues, and that kind of really makes up a comprehensive responsible investment approach.
Okay. And Nalini, can you clarify this? Because I hear this from investors and they tend to get confused about it. ESG investing, it doesn't mean that, oil and gas companies are automatically eliminated, right? Like if they're still making positive changes, they can still be part of the portfolio.
Absolutely. And when we talk about such an important topic like climate change and needing to transition to a low carbon future, we need to have those market participants included on that journey. And so negative screening might be what you're alluding to in terms of removing certain sectors, products, or services from your investment universe. But that is only one approach to responsible investment and not at all equivalent to being mindful of ESG concerns in your portfolio.
Okay. I know, as we talked about, a big focus for most investors continues to be climate change. And of course, Earth Day is just around the corner. How has this particular space evolved?
So I think climate change is really hitting close to home now. I think, for the past 30 years, climate scientists have been kind of raising the alarm bells about the finite amount of time that we have before we cannot reverse the impacts of climate change. But I think we're actually seeing it in real time occurring all around us by extreme weather events, by understanding, how the global south is bearing the brunt of some of the impacts of climate change versus developed nations up north. And so I think, you can't avoid an issue like this anymore. It's no longer, do you believe in climate change? Do you not? It's all around us. And I think people are starting to realize that, inaction is actually going to lead to a future that is problemsome for not only themselves, but future generations to come.
Yeah, absolutely. And we only have 20 seconds to the break. Quick question. Is that the number one driver of growth? Is it environmental concerns, or are you seeing money flow into other areas?
So it's the number one concern, I would say, from investors, but it is not the number one driver of growth. I think there are a lot of environmental, social, and governance factors that we are now learning are materially impacting the future valuations of companies that we're considering to invest in. So better education around material ESG factors is really what's driving the assets to this area.
Welcome back. Let's talk about stewardship, Rosa, because this is what you and your team do. You make sure that you're evaluating, I guess, the right investments for your clients. What's involved here? What is stewardship?
Yeah, so stewardship really means being responsible stewards of our clients' capital. And this goes beyond making the investment decisions. It is once you are invested in a stock or a bond, you are invested in the real world and you essentially have a seat at the table to encourage companies' behavior. So we can be a real driver of change on the ground to influence company practices and policies. And this work we do extends across all of BMO funds, not just our responsible investment funds. And beyond responsible wealth preservation and growth, we believe that all asset managers should be responsible stewards. There are a variety of tools that we have to our disposal to create this types of positive change, one of which people may have heard of, proxy voting, so using the right to vote at company shareholder meetings, also direct engagement with companies, collaborating with other investors, and then engaging with policymakers and standard setters.
Okay. So, Rosa, who actually picks the investments then? So that's not the role of what you do.
The portfolio managers responsible for the funds would pick the stocks. We do provide the portfolio managers with data and insights on ESG matters. But then once the stocks are in the fund, it's our responsibility to create that type of positive change where necessary.
Yeah. So can you give us examples of just some of the changes that your team has advocated for?
Yes, of course. So we're about to actually come out with our annual report, which will provide some more details. But one of the changes that we've made, so we've been engaging a lot of oil and gas companies actually on their road to net zero and eliminating emissions. And Suncor actually made a big announcement last year. They had set a target to be net zero by 2050. But we have been asking them to clearly tie that into executive compensation goals. So tying it to what the CEO gets paid. And that's what they did in 2022. So we're very proud of that's one example of the work that we've been doing. And we've been doing that across the industry. Also, at companies that, for example, are not in the oil and gas sector.
Okay. You mentioned annual report, and I want to bring up a QR code because for viewers who are watching, you can go to BMO's Responsible Investing page just by putting your phone up against that QR code, because this is where you can read about their annual report, investment policies, and also the latest trends, and of course, much more. Rosa, you touched on something where you're influencing companies. What's been the reception?
It's been really amazing how it's changed over the last few years. So when we first started out this type of work, companies were a bit confused. Why are investors caring about environmental and social issues? But now they are much more receptive. It's both a message that's coming loud and clear from the investment community and also from their consumers. So we think that companies are trying to do the best that they can. It's mostly a matter of resources and making sure that our investor concerns and priorities are clearly heard by the companies we invest in.
So what's been challenging then? Because you've kind of touched on that. And where do you think we are in terms of progress?
Yeah, there are, of course, still a lot of challenges that we're facing, especially as investors. We really rely on reporting that companies themselves put out to understand what their risks are and how they are managing those. And that reporting is not always consistent. And so that's what a lot of our engagement really is about. Can you disclose to us more information about your environmental approach, social approach? But this is also where our engagement with policymakers comes in really handy. So rather than talking to companies one by one, we can encourage regulators to mandate certain reporting that then is disclosed to investors.
Yeah, and have you found that the reporting has been transparent in the way that you'd like to see it, or you think there's still some progress to be made there?
There is still progress to be made. Yes, we are engaging the securities regulators, for example, on making climate reporting mandatory across Canada, as well as in the US, and making it just consistent, the type of information we receive.
Oh, that's great. That's great news for investors who are seeking that transparency. We're going to take another quick commercial break, and we'll be back in 2. Welcome back to Strictly Money. I'm here with Rosa Beemt and Nalini Feuilloley of BMO Global Asset Management. Nalini, I'll ask you this question because I think for viewers who are watching this and they want to invest, I certainly get this question all the time. How do they get started? What are some of the things that they need to think about?
Absolutely. So this is a really great question because sometimes to navigate this space can be a little bit overwhelming. And I think the one thing to know is that there's something for everyone within this umbrella of responsible investing. There isn't just one approach. So if you have, high conviction views as it relates to a thematic like climate change or even diversity, equity, or inclusion, you can work with your financial professional to say, are there funds, are there portfolios that actually reflect solving for some of these challenges? And so we have thematic funds here at BMO Global Asset Management that focus on those types of issues. And so the whole fund will be trying to move the needle on one ESG issue versus another. If you don't necessarily have high conviction values that map to certain ESG issues, you can just say, I want to invest with a portfolio manager, an asset management firm who's really taking into account all material E, S, and G issues, because they are going to impact kind of the future growth of my investments. And I want to make sure that they're well informed and they know how to measure and value that risk. And so that is a concept that we call ESG integration. Make sure that you're doing your due diligence alongside your financial professional on who you're putting your money with to kind of mitigate that if your investments are especially for the long term.
Yeah, I think that one of the bigger concerns that I hear is they just want to make sure that their dollar is making the impact. Right. Is there something specific that they could be looking for, or screening tools, or?
Yeah, so I think that's a great point. Impact investing is a very defined space. So we're looking for not only a financial outcome, but a measurable social or environmental outcome as well. So you want to make sure that whatever product or portfolio that you're investing in that might have an impact label is actually holding themselves accountable and being transparent with the reporting on the impact that they are actually trying to make. So, you can have like a great name of a portfolio, glossy marketing slides, but you want to make sure that there is kind of some reporting that comes along with that, the kind of reporting you would expect on the financial side, but also for the environmental or social issue that particular fund is trying to tackle.
Yeah, makes sense. Well, let's run through some of BMO's offerings in the space, and we have a board, so we'll bring this up. Now, obviously, these are just a few of
Yes.
the many offerings that you have, and you have a mix of funds and ETFs. Can we just start with it's ESGG, so the BMO MSCI Global ESG Leaders Index, and this is an ETF.
Yes.
Who would this be suitable for?
So I think this would be suitable for somebody who's new to the space, right? You're looking at your assets. You might have an asset allocation plan in place from an equity perspective, and perhaps you have different benchmarks reflected in your current traditional portfolio. So you have an S&P 5 index, you have an EFA index, you have an ACWI index. So this portfolio would be suitable for somebody who wants to make a quick swap. So take out their traditional global exposure in equities and actually replace it with another global index that's actually prioritizing ESG performance amongst the companies reflected. And so I think it's a great starter way to get into the space to say, I want to invest in companies that are actually prioritizing sustainability while still getting the exposure that I'm looking for from an asset allocation perspective.
Okay. And there is another one. There's the Global Opportunities Fund as well.
Yes.
What's the difference? Why would someone pick that?
Yeah, so the Global Opportunities Fund is really more reflecting the skill of the portfolio managers managing that active strategy. So that fund is going to be a lot more concentrated in its positions, probably like 30 to 45 positions max, whereas that ETF that mimics the MSCI World Leaders Index is going to be a lot more expansive in terms of exposure. So one is a mutual fund that is being actively managed by portfolio managers, and the other one is going to be replicating the benchmark that MSCI has put forward.
Okay, and we should remind people there's balanced funds as well. There's a mix of equities as well as fixed incomes for those who are a little bit more risk averse. And we'll bring up the QR code again. Let's bring this up because for any of you who are looking at funds, you can go again to the responsible investing site, the page for at BMO, and pull up the fund fact sheets because that's important. That's where all the details are. Welcome back. We've been talking about responsible investing, ESG investing, and some of the funds and ETFs that BMO offers. We do have a QR code, so I will bring that up for those of you who are interested. You can go there, look at their selections, and pull up their fund fact sheets, which has a whole host of information. Rosa, I want to come back to another fund that BMO does offer, and this is the BMO Sustainable Opportunities Canadian Equity Fund. So for those who want to invest closer to home, tell us about this fund.
Of course, yes. I think the space has really evolved in Canada. There's innovation happening across sectors, also those that might traditionally not be aligned with sustainability. So, for example, mining is now really considered a critical sector, essential for the energy transition because it supplies the minerals needed for clean energy solutions, batteries, etc. But a good example in the fund would be a company like WSP Global. They are an engineering company, and it's really core to their business model to find solutions to sustainability challenges like climate change or designing better infrastructure that is sustainable. And so it's an example of a company that's really capitalizing on sustainability challenges and creating revenue out of that.
Okay. You talked about the progress we've made, and I want to just dig a little further because I think like maybe 10 years ago, maybe longer, it would have been pretty difficult, I think, to create a diversified portfolio just with Canadian companies, right, that meet these criteria. Obviously, that's changed. Can you talk a little bit about that?
Yeah, I think it has been a bit of a confluence of both investors starting to ask companies for this information, consumers becoming much more aware of sustainability challenges and really pressuring companies, slowly regulation changing, but also just competition at a global scale. You know, I think Canada was a bit behind when it came to, for example, European companies in sustainability. But this is a global market and investors come, you know, from all different types of markets. And so Canadian companies, I think, have realized that they needed to catch up in some way to global peers. And as well, we've been seeing a lot more collaborative engagement by Canadian investors with Canadian companies on issues like climate change, diversity and inclusion to really showcase, hey, this is what investors care about. We want you to prioritize this.
Okay. Nalini, I'll throw this one at you because I remember reading a report not that long ago that said that there are still a lot of advisors who don't understand this space. And so they avoid it. And yet, there are lots of investors who are looking to invest in this space. What's your advice to investors who want to do that? What sort of communication should they have to make sure their finance professional is doing what they want?
Yeah, no, I think that's a really good point. And, we've been talking about this for so long, this just gap in education. When you look at the financial system, you have institutional investors, potentially sophisticated institutional investors like pension plans, asset managers, who understand the material nature of ESG issues and how they can absolutely impact your long-term investment strategy. And you do have advisors who are banging the drum around kind of sustainability is the future of how we invest. And, it's not one or the other. So not to cast a wide net with that sentiment, but I think there's this big gap when it comes to education and understanding how these issues do impact investments over the long term. And so my advice for end investors who are informed and care deeply about sustainability issues is to be persistent, right? Don't take no for an answer. Don't take some of the myths that we hear about performance at face value. Roll up your sleeves, do some digging and due diligence of your own. I think as managers like ourselves, we're actually trying to close that gap through our thought leadership and our research that we're putting out there, available to anyone who wants to read it.
Okay.
So continue to be persistent and, hopefully you'll find the solutions you're looking for.
Well, Rosa, Nalini, great to have you on. Thanks so much for your insights.
Thank you.
Thanks you so much for having us.
Well, that wraps up this episode of Strictly Money. Once again, if you want to learn about how to invest with impact, whether it's because you want to make a difference to the environment or social causes, go to BMO's Responsible Investing page where you can learn about the trends and the funds and ETFs they offer any type of investor. Happy Earth Day. Thanks for watching.